Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing an illustration which is related to the adjusted cash book again. So this illustration will give you the basics, or rather the basic requirement how to prepare an adjusted cash book using the adjusted cash book balance itself. So now we are going to prepare the adjusted cash book basis on the discussion that we had earlier regarding the balance that has to be taken forward from that cash book balance to the bank reconciliation statement. So we'll have to prepare illustrations according to that itself. So let's start with the question first. So the question has been mentioned here. Let's read it out for you. On 30th of December 2017, the bank column of A. Philip's cash book showed a balance of 4610. Now this was a favorable balance, that means a debit balance here. On examination of cash book and bank statement, the following errors were noticed. The first error was amounting to rupees 6,30,000 which were issued to trade payables was mentioned in the cash book on 30th of December 2017. However, no entry was recorded related to this transaction in the passbook. That means it was only recorded into the cash book and it wasn't sent to the bank for collection. So this is the serial case of check issued but not presented for payment. Now, the next error was check amounting worth rupees 2,50,000 was deposited into the bank on 30th of December 2017. However, the credit could have happened only after 1st of January 2018. That means this wasn't a part of adjusted cash book basically because there is a timing difference here, and timing difference errors are not considered in adjusted cash book preparation. The third error was a check worth rupees 73,000 had been dishonored prior to 30th of December 2017, but no record of this appeared in the cash book. That means the dishonor entry was already passed in passbook and no entry was recorded into the cash book. So this will be a part of adjusted cash book here. The next error here that we found out, or we figured out, is a dividend of 3,80,000 was paid directly into the bank account. However, there was no record of it in the cash book. So again, this entry will be a part of adjusted cash book because this refers as omission of transaction. Now, the next transaction refers to bank interest and charges amounting to 4,200. They were only recorded in passbook. That means again, this is a part of adjusted cash book because this is a clear case of omission of transaction, as there was no record of bank charges into the cash book here. The second last transaction refers here as no entry was made into the cash book regarding the banker's check which was provided worth rupees 10,000, and that's a standing order. So there is no entry in cash book. It was directly a payment that was debited from your account, and this was a third party debit. Now the last error was a check worth rupees 27,000 drawn by B. Philip was charged onto A. Philip's account by mistake, and this was the error that was recorded there. Now we're supposed to prepare the adjusted cash book here, and after that we are supposed to prepare the bank reconciliation statement. Now we'll be going ahead with the preparation of adjusted cash book first. So when it comes to adjusted cash book, we have prepared the format here. Ideally, there is just one amount column that is required. However, now that you have kept two amount, the inner column will reflect the changes, or rather any additions or subtractions. However, if the final amount is supposed to be mentioned, that can be mentioned only in the outer column. So the first thing that we'll be doing is we'll be carrying down the balance. That means the debit balance of cash book. So the balance has been brought down as 4610 now. Now, the first two transactions that were given or that were given us in that specific question refers to delay in any kind of procedure, rather delay in making the transaction complete. Hence, that is not going to be a part of adjusted cash book. So let's go on to the next phase. So the next transaction refers to a check for rupees 73,000 that was dishonored. So if it was dishonored, then we have to record that transaction. That means that much amount should be recorded on the credit side as it is going to reduce. That means a check that was deposited, so 73,000 has been already recorded on the debit side of cash book, and to neutralize it as it has been dishonored, we have to record it on the credit side now. Now, after 73,000 has been recorded, we need to understand that the next transaction that has to be recorded is the dividend, because that refers to the omission transaction. So a dividend has been directly credited into your account. That means passbook entry has been already done. So this has to be added up to the cash book. That means this is increasing the bank balance, so it will be recorded on the debit side of cash book. So that has been also recorded here. Now let's go on to the next transaction and see if that can be placed in adjustment or rather adjusted cash book here. Now after that we have bank interest and charges amounting to 4,200. Again, this is related to omission, which is a part of adjusted cash book. So this is reducing your cash balance. So this will be recorded on the credit side of cash book. After that, we have another transaction which is worth rupees 10,000, which refers to the transactions that were supposed to be a part of trade subscription. So as this has been already debited out of your bank account, hence we have to subtract it from the cash book. That means it will be recorded on the credit side here. So with this transaction, we have recorded all the adjustment transactions that were supposed to be a part of this specific format. So let's figure out the interim balance first. So it is clearly seen that the debit side is 3,84,610 and the credit side is 87,200. So that means the balance is on the credit side and that will be brought forward, and whatever balance is being brought forward, that will be used for the opening balance. So the balance that will be carried forward is 2,97,410. So now we have prepared the adjusted cash book. Now it's time to prepare the bank reconciliation statement. So while preparing this bank reconciliation statement, you need to make sure that all the items that have been already taken care into the adjusted cash book need not be taken care right now, need not be a part of bank reconciliation statement here. So the opening balance of cash book has been mentioned here, that is 2,97,410. Now we have to add certain items which are not a part of the adjusted cash book and we have to subtract certain items out of those itself. So the first transaction that refers to wasn't a part of adjusted cash book, that is checks amounting to rupees 6,30,000 which were issued to trade payables but were not recorded, or rather this wasn't cleared. So checks are being issued here, favorable balance is as per the cash book. So the passbook is incorrect. That means check has been issued, the entry has been already passed. So in passbook it is supposed to be subtracted. The passbook is incorrect, hence that will be added here. Now the next transaction refers to check amounting to rupees 2,50,000 were deposited but were not cleared before 30th of December. That means in this case this was already passed in cash book. The entry in passbook is supposed to be done. It was supposed to be added there. As the passbook is incorrect, it will be subtracted. Now the next transaction, or rather the last transaction that has to be taken care of, a check that was drawn of 27,000 in the name of B. Philip was charged to A. Philip's account. That means the passbook entry, it was subtracted from B. Philip's, or rather A. Philip's account. Ideally it should have been subtracted from B. Philip's account. So 27,000 has been subtracted from there. It has to be rather charged to B. Philip's account. So in that case it has to be subtracted from this specific cash book as well. So it will be on the subtraction side. So as this specific transaction has been already passed in the passbook here, the next effect or the next effect that you have to take care of is the cash book, because we are dealing with favorable book. So in cash book it has to be subtracted. It is a correct book, hence it will be subtracted there. So the total of 6,30,000, that is the one added amount, plus the opening balance gives you 9,27,410. And the total of 2,77,000 is also mentioned, that is supposed to be subtracted. So let's figure out the balance here. So now that we have figured out the balance here, that is the balance as per the passbook. So the balance is 6,50,410 rupees. That is the balance as per the passbook. So this is how the adjusted cash book is supposed to be prepared. Every time you go ahead and prepare the cash book or adjusted cash book, you need to make sure that the items that are supposed to be a part of adjusted cash book will never be a part of bank reconciliation statement. Now, this is how the ideal adjusted cash book needs to be prepared. So please make sure that this is the format that is supposed to be followed whenever adjusted cash book is supposed to be prepared, or at any point of time you have to go through an adjusted cash book problem. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.